I'm already hearing it get louder and louder as people are lining up to tell you that a recession is coming in 2024. I mean, all the charts and data points are aligning perfectly once again to create the ultimate doom scenario, just like last year around this time where the stock market crash was only going to get worse because the inverted yield curve on the 69th day following a Monday where the day starts with M and the date is somewhere between 1 and 31 means a crash is absolutely coming. And what a crash it has been this year with the NASDAQ up 37%, the S&P up almost 20%. So thank goodness we all listened and didn't buy stocks last year like Nvidia in the 100s, Meta, Amazon, and Google in the 80s, and avoided this disaster that we got this year with those stocks basically doubling or tripling up or even more. So we should absolutely listen to those same folks again, right? Well, I'm going to kind of take a different approach than I normally do with this and actually show you guys some of the points that they are absolutely maybe correct on. I'll give you some counterpoints to that, and I'll show you why, regardless, you can still make a fortune in the end. So make sure you like the video if you like getting the truth without the hype. Now, I believe everybody can retire early and have financial freedom regardless of all the lies that you've been told. So if you want to take control of your life, I'll show you the very real alternative to get to financial freedom or retire early or both. So make sure you're subscribed to my new channel, which will be the pinned comment down there, and check it out if you're interested in retiring early and being financially free. All right, we got a lot to dive into, guys, so let's jump right here into the first point. So point number one for a recession is that it only takes 2 consecutive quarters of negative GDP to have a recession. Guys, whether we want to admit it or not, or whether you've been told one thing or the other thing, it doesn't really matter. The point being, the bar for a recession is actually pretty low. I mean, we just had probably the mildest recession in the history of recessions last year in 2022. We got that 2 consecutive quarters of negative GDP. And if you look all the way back to 1980, outside of the big recessions, can you name the other 5? I'm not including the financial crisis or the shutdown one that we just had. I'm talking about, can you name the other 5 recessions that we've had since 1980? The vast majority of people cannot name any of them, and only a handful of people can name a few. And I haven't met anybody yet who can name all of them since 1980, which means the bar is pretty low for a recession. Sure, we have some of those crazy recessions where obviously everybody remembers them because there were deep recessions, but the vast majority of them are pretty low and pretty benign in terms of the overall economy and everything else. So the bar is low in order for us to get one. The counterpoint to this is the economy is red hot. Guys, whether you like it or not, whether it aligns with your stance on the economy or whatever the case is, overall, the US economy is red hot and GDP growth is just ridiculous at this stage. There's no other way to put it. There's no other way to, 4.9, and then I think it actually got revised up. There's no other way to put that other than ridiculously hot, which means it's going to take something dramatic. I'm not saying it can't cool off and come down to the normal 2% or so, which is where we probably want to be and where the Fed probably wants it to be. But just to get down there is going to take a lot of doing, much less have 2 consecutive quarters go negative from this hot of an economy, this hot of a rating, especially after all the rate hikes have happened. It wasn't like it was doing this before and then they started hiking the rates. No, this is after all the rate hikes have happened. That right there was our latest GDP reading. So it's going to take a lot to actually get us down to that negative level. And if we're being honest about that, it's going to take a shock. It's going to take something devastating happening out of nowhere, a black swan event of some sort or something like that in order for us to get there. It's not going to be just a cooling of the economy that cools to that point that fast to get us there. It's going to be something devastating. It's going to be something out of left field that's not out there, nobody knows about yet, that's going to get us there and get us to the recession, at least based upon the GDP numbers. That right there is how that looks. So point number 2 for a recession is record consumer debt. Look, I'm not here to try to spin facts or anything else. The facts are credit card debt is at a record high. Consumer debt is at a record high. Those are facts. It's in the charts. It's in the government data. It's in every piece of data you pull. All those debts are at record highs. And oh, by the way, also keep in mind, interest rates are a lot higher than they were before. So that debt is a lot more expensive than before. So that's kind of a triple whammy almost in a sense. People got more debt than ever, more credit card debt than ever, and the rates are higher than they've been in a very, very long time on all that debt, which of course may spell disaster for the economy. Counterpoint, every year the economy expands, it's a record in terms of those debts. We live in a debt-based economy, and with every single economic expansion that we've had for a very, very long time since the economy was based on debt, it has been record after record after record consumer debt. As a matter of fact, the only times we really don't have record consumer debt are when the economy is in trouble. When something happens, something negative happens to the economy, that's when you see that number actually tick down. Otherwise, when you look at the chart, we're actually kind of right back on track, right on the trend line we were at before kind of the whole pandemic and everything else happened and everything kind of got all whack with all the Fed spending and the world shutting down and everything else like that. Outside of that, everything is basically back to normal. The bottom line is, and the facts are, when we have record debt, it signals that the economy is absolutely humming. And then whenever we have that debt seemingly fall off or trend down, it means the economy is in trouble. We can disagree with that. We can say, hey, that's not the way it's supposed to be. But the reality is we are a debt-based economy, and that is how it has to operate in order to expand. And so that expansion does not concern me at all. Every single year the economy is good, the debt expands to record levels. Point number 3 for a recession, unemployment will go up, creating a recession. Raising interest rates almost always creates more unemployment, which of course leads to a recession. We can go back and see that is exactly what happens every single time the Fed raises rates. You see unemployment tick up as well, with just a couple of exceptions. That's what happens the vast majority of the time. And when you see unemployment creep up to unacceptable levels, it is guaranteed we are going to see a recession in the economy. That, my friend, I agree with completely. Those are the facts right there around that. When unemployment gets to those unacceptable levels, kind of outside the normal there, we see a recession in the economy. Counterpoint, the data shows this is one of those exception times. Despite the fastest increase in interest rates from the Fed, basically in the history of the Fed, maybe that one other time in the 80s, maybe they got that. But anyways, number 1 and number 2, despite all that, unemployment is historically low. This is the most consecutive quarters where unemployment was under 4% in over 50 years, guys. That's just incredible. And oh, by the way, we saw a little bit of an uptick, just a little bit, the past couple of months, and everybody expected this month to be higher as well. And sure enough, November's data was released on Friday. And what do you know? It came back down to 3.7 again. So right now, it appears as though unemployment is completely unaffected by these rate hikes. Now remember, the rate of unemployment that's considered kind of generally acceptable is in the 4s. And right now, we are still under that 4 mark. We are not even to just the acceptable level yet, much less to a level that would signal that unemployment is signaling a recession is coming. Basically, think during the financial crisis, we had unemployment at 10%, or during kind of the shutdown time, that got up to 8%, or back in the 80s, the last time we had high inflation and the Fed jacked rates up, you saw 10% unemployment. Right now, the data is showing you the exact opposite thing is happening, and the unemployment rate in the labor market is not signaling recession at all. But let's say I'm wrong about all these. All of my counterpoints are wrong. A recession is coming. Everything we just talked about is completely wrong, and I messed up. I got it wrong, and that could very well be true. I agree completely there. But again, we're all kind of like speculating on that future, right? Doesn't mean we're always right, but let's say I'm completely wrong. Guess what? I'm still going to be a massive winner regardless, and so will you if you're able to take advantage. We can all be massive winners in this, and let me explain why. The fact is, every single recession is a golden opportunity to make a fortune in the stock market. Every single time, those are the facts. I mean, just go back to June of 2022 when we had that, minimal, whatever the heck kind of recession you want to call it down there. That was a great opportunity and a great time to buy stocks. Go back to the financial crisis during that time, and that was a once-in-a-lifetime opportunity for the stock market, not just the stock market, real estate market as well. Man, if you bought during those recessions, during those terrible times, you have made multiple fortunes moving forward. And you can pretty much go back to every single recession, pull up the charts there, line it up with the stock market, and you tell me which one of those recessions you shouldn't have been buying stocks and it wasn't a golden opportunity to make a lot of money. As an investor, I'm not talking about other folks because there's a lot of bad things that come along with a recession too. I agree there, and I hate seeing that. I hate seeing unemployment spike up or all those other things that happen that are negative towards folks spike up. But as an investor, the best opportunities happen during recessions time after time after time. So I welcome a recession and I hope that I'm wrong. So be prepared, be ready, so that way you can take advantage if in the event all these crazy charts and graphs that point to the 76th moon on the 37th day, whatever all that garbage is, if they happen to be right this time for the first time and the 75th try, they're finally right, you're prepared and you're ready to make a lot of money. And if you need help creating a plan and understanding exactly how to take advantage of a recession or anything else that happens, make sure you check out the pinned comment down there for my group where you can learn through 5 courses. You can talk directly to me, slide into my DMs, jump on our live Q&As. We got the stock analyzer tool you can use completely for free. We got the best 6, 7, and 8-figure Discord out there that you can use and be able to talk about this with all those super smart members out there who have been doing this for a while. And there's so much more with the group, guys. Make sure you check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.